Hello everyone, I want to show you why I don't chase the market, right? This is Usdchf and it gives me these high probability setups, right? So I want to break them down on how I came up to the point of taking the trades, right? Majorly I focus on market structure, supply and demand, and then from there I go to my entry time frame and take my trades where there is need to be taken. So without wasting time, I always start from T1 hour, not T1 hour, but the higher time frame. Let's start. Let me delete everything first so that everything can align. Perfect. So start from the daily. This will help me know the narrative of the market, like what the market is doing at this particular moment that I was on my chart, right? So from here you can see that previously it was bearish, right? But at this point it started printing bullish, right? And then we had this last breakout structure, and this where the buyers took control, right? See how the momentum is heavy, full of buyers, no sellers in between, up to this level, and then we are seeing sellers stepping into the market to bring that retracement at least up to the discount level before we continue with the buy. My day has given me direction, so my 4 hour is where now I start doing my market structure, right? So this is the last breakout structure I can see from the 4 hour time frame in line with the daily time frame. That's the general bias of the market. Breakout structure. Once I've marked my breakout structure, I want to see my swing high and my swing low. That's my dealing range. This is my swing low, and this is my swing high right there. So this way I want to focus on at the moment and see what price is doing. So then so I came in, but instead I doing the retracement. Alright. The sellers are doing the retracement. So what did we, I was expecting this price to come out to this level down here before we continue with the buy. Right, so I saw this breakout structure, internal breakout structure right there, breakout structure, and now this gave me my internal dealing range. This is my swing high and my swing low right there. So this just gives me the direction, right? Once the bias is clear, I can apply. Right? So it's at my supply zone, right, to the downside. But the time I was marking this supply zone, price was somewhere down here, right? So I was waiting to tap to my supply zone. Then I will sell to the downside, targeting this week low, right? When we are in a downtrend, we want to see price taking our week low to create that bearish breakout structure or bullish breakout structure, right? So once I saw this and I knew that price was doing the retracement, I knew that price was going to retrace up to this supply zone and then we will go down. But I didn't take trade from the 4 hour time frame. Alright, I waited. I didn't sell because price just touched my supply zone. I just wait, go to my lower time frame, wait for confirmation, and then now the market will give me a story why I'm buying or why I'm selling. So Once price came and touched this supply zone, before that I just wanted to know my liquidity. And for me to know my liquidity, I always mark my previous day high and my previous day low. This was my previous day high and this was my previous day low, right? I hope you can see it so I don't complicate things, right? This was my previous day high. Let me try to mark it. Previous day high, and this was my previous day low. Previous day low, right? So when I come to 4, I'll try to see them correctly. Yeah, it was somewhere right there. The previous day high, and this was my previous day low, right? So when I marked this, all that, and then I went to my 1 hour. My 1 hour now, I don't do much on 1 hour. My 1 hour is just to redefine my areas, right? My supply, my demand, just redefining. I know exactly where I should expect price to react from. So at this point, I redefined this to my pivot candle, right? This one. I named it my supply zone. I named this my supply zone. And I waited patiently for price to tap it. Right? And this was my previous day high. Marked it right there and waited price to take it out. Right? This was on Wednesday, but the setup came on Wednesday, New York, right? New York there. Right? So this was very early in the morning. And this was somewhere in New York. So once I marked this my previous day high and my previous day low, just like and waited price to come. So right? And the price, no guessing. I just follow my plan and wait price to come to me. Right? So once price tapped to my supply zone, I just waited for a confirmation. I have two types of confirmations. I may use the 15-minute market structure shift or the engulfing candle that will form after price has tapped my supply zone. Alright, so once I saw price tap into this zone, I was watching it and I waited for this black candle to close bearish with momentum. So then I activated my first trade from this level, right? From that point, targeting the opposing liquidity. That one. This was the first liquidity I was targeting. But something happened very interesting right there. I want to show you what happened. If you can see, this is a breakout structure to the upside, right? Breakout structure to the bullish side, right? So what do you expect when price has done a breakout structure? Expect it to come to the demand zone and then it will continue to the upside, right? So this was my strategy, but I was watching this demand right and see how price will react. I was confident, like, yes, you are going to turn direction, because if you can see, this is an internal uptrend, right, up to this level. But I was quite confident that once we have tapped our higher time frame area of interest, I want to see sellers coming to the market and take over these buyers. So I was expecting price to crash down, right? But I was not blind. I was just watching it, and I marked this demand zone, and I said, well, I want to see price if it's going to react from this supply, not supply by demand zone, and continue to the upside, right? Or it's going to, or if the sellers are going to break it and continue to the downside. And eventually, as I anticipated, price came to the demand. Buyers tried to push it a little bit high, right? We can see 3 candles. Let me move this thing. It's just blocking my vision. Blocking the vision, and we can't I've deleted everything. I didn't mean to delete everything now, bro. Alright, so let me mark just my supply zone right there. So once I add this breakout structure, I wanted to see price if it was going to react from this demand zone, right? But well enough, you can see that buyers tried to move price high, right? It created these 3 candles, signifying that some buyers were in here, but they were overwhelmed by the sellers. But the sellers were more heavy, that broke price to the downside and violated this our demand zone. So what happens once our demand zone has been violated? It tells us that we have had a change of character all day. There has been a shift in the market. Now the buyers are no longer in control. Now we have the sellers who are in control of the market. So once I saw price closing below my demand zone, I was just confident that we are going to continue with the sell. So I mark this as my change of character. Right there, my change of character. Change of character. And I was looking now to see where did this change of character originate from, right? Where did the sellers step in that took out these buyers, so that I should know now where those mass orders are placed, or where the smart money guys stepped into the market. So I was looking at the supply zone that resulted to that change of character, and this was my supply zone right there. I marked it up to that point. Come on, just mark yourself nicely. Don't start stressing me right now. Very nice. So I marked my supply zone like that. So, and I know that price was going to react from this. And once I saw price creating this rejection candle to the downside, this black rejection candle, I was like, well, now it's time for me to sell. So I took the sell from this candle, this black candle. When this closed, I took the sell. My stop loss was placed significantly above my supply zone. I don't just place my stop loss for the sake of placing them. I place them on the point that I don't expect price to go beyond. If price goes beyond my stop loss, then my area of interest is invalidated or my bias was wrong. Then I shift up to the newly created bias. So I place my stop loss above this supply zone, knowing that if price closes above this level, then we are no longer in the bearish run. We have shifted to the upside, and then I'll start looking for buys. So I placed my stop loss above there, and I targeted this liquidity, right? As simple as that. It was like 1 to 2. It was something like 1 to 2 point something, somewhere like there. So this was my second trade. This trade happened because we had this change of character. If this change of character was not there, this trade would not have happened. Alright. So this change of character is the one that gave me confidence to take this trade from this supply zone that resulted to this change of character. And my first trade was this point, right? And that's because price reacted from my higher time frame supply zone, right? Price reacted from my higher time frame supply zone, and it gave me a confirmation. That was this candle closing below. That was my confirmation that I wanted to see from the market, right? So this was my 2 trades that I took on Usdchf based on market structure and supply and demand zone, right? I also missed one trade on Euro USD. Can you come first? I missed it. I want to show you what I was looking at. Nice. Oh, I see price at last came and tapped it, but this was very late. I was initially waiting price to come to this point, right? And this was on Thursday. I was waiting to come to this point on Thursday. When I saw it close above this level, right? This is now market structure shift or a change of character. And once I have had that market structure shift or a change of character, I just want to place my orders at the zone that resulted to that change of character or market structure shift. That's the zone where now the smart money stepped in, or where the buyers or sellers that overtook the opposing participants in the market steps in, and that's where I want to place my orders. So I place them there, but price just rallied up to that point, and I was like, this is not going to happen. I closed it very late on Thursday, but I can see that Friday price was trying to calm down, but it was already too late, so there's no way I would have been holding my position up to that day, right? It's not healthy for me, and for my trading plan does not allow that, right? Yes, it may come here and react and go up, but I don't want to associate myself with such kind of trades, right? And that's because we have had this. If you can watch this closely, this bearish change of character or market structure shift. Yes, it may react a little bit up to this level, and then it may continue to crash, and it will finally take me out. So it's not a worth trade to take. So that's the trades that I was able to see last week, and I executed them according to the plan, setups, executions to take profit, right? I don't want you to focus on non-take profits. The real lesson for this process is that notice that both trades followed the exact same framework, right? Air time frame buyers first, supply and demand, market structure shift, confirmation, and then lastly execution, right? Most traders reverse the process, right? They enter first and then they hope for the market to confirm them later, and that does not happen frequently, right? The professional traders, they want to place themselves in a better position, that their trading plan that may work according to the data they have on them. So that's it. Always protect your know that you are just one trade away